Good afternoon, everyone, and welcome to the Senior Living 411 series. Today is day 30. I'm going to quickly share my screen with you. All right, so November is Fall Prevention Month. And for the month of November, we've been covering a variety of topics relating to fall prevention. We have discussed home health care, stair lifts, home modifications. Last night we spoke about the 411 on how to financially plan for the what ifs and so much more. I found it fitting that to wrap up this 30th day of Fall Prevention Month, we discuss insurance. For many, insurance is a mystery. What is the difference between life insurance and long-term care insurance? What illnesses are covered by critical illness insurance? What are the types of disability insurance? What are the recommended types of insurance for seniors? It's time to take the mystery out of insurance. Today, we're going to discuss the 411 on insurance for seniors. Now, please join me in welcoming our special guest for today, Mr. Andrew McDonald. Andrew, welcome to the show.
Thank you, Desiree.
All right. Great. So Andrew is an electrical engineer by trade. Prior to entering the world of insurance, he worked as a supervisor of operations at a manufacturing company. However, his true passion lies in entrepreneurship and the financial services sector with a focus on insurance. Andrew has been a licensed insurance advisor since 2000, and he's never looked back since that. He's also a girl dad to 4 beautiful daughters. He's a husband, a son, and a Christian by faith. Now, a little bit about me. For those of you who haven't watched the last 29 shows, my name is Desiree King, and I'm a senior home safety advisor here in Ontario. I wanted to share my story with you. The first question I'm often asked when I do shows like this is, what do you know about aging? Or you look so young, or why do you care? And my response is that it's my passion. Now, don't try to calculate my age, but when I was 14, I volunteered to work as a candy striper. And for those of you who know what a candy striper is, we actually wore a red and white apron in the hospital. And in my case, I delivered books on the geriatric floor. And in doing that, I got to have some wonderful conversations with seniors. And I really believe this is the beginning of the path to where I am now. I then went on to work as a dietary aide in the geriatric ward of a hospital throughout my high school years. And since then, I have owned or operated several senior-related businesses. Most recently, I worked as a realtor for the past 6 years who specialized in working with the 55 plus demographic. I've taken a slew of courses in aging in place, downsizing, retirement living options, and dementia care. I've also worked as a client care coordinator for one of the leading home health care companies in North America. And I must admit that during my time spent as a realtor, I've always felt a pull towards the educating and serving side of the business more so than the transactional real estate side. So at the beginning of 2020, I knew that something in my life was about to change. I knew that my calling was greater than my career. But little did I know or anyone know that we'd be hit with a pandemic called the coronavirus. And over the past 7 months, coronavirus has killed roughly 9,822 Canadians. 81% of these deaths are linked to long-term care homes. Now, health officials have cited the need for rigorous visitor and resident care protocols and precautions in these facilities, but the solution is also in our hand. We as a people, as the future elderly population of this country, have to make some decisions as well. I firmly believe that we as Canadians need to change our thinking and method of caring for the elderly. And one possible solution is that we begin to honor the wishes of our elderly members of society and better enable them to stay at home by doing what places like Scotland has done and pouring money into home modifications and home health care as opposed to hospital funding. So for the past 2 months, as I sat at home, listening to the news and watching the number of deaths occur with our seniors, I realized that I wanted to do more than I was already doing. I realized that being a realtor did not align with my desire to have a greater impact on the lives of seniors. There's an ancient Greek physician named Hippocrates, and he once said, drastic times call for drastic measures. My drastic measure took the form of me officially resigning from real estate and turning my attention to my one thing, which is senior home safety. While many seniors want to stay at home safely, their homes are not equipped to do so. And the statistics I'm about to show you will show you just that. So in preparation what I see will be a shift in the mindset of seniors, their adult children, and society on the whole. My main objective is to assist families in determining what is wrong in the homes of themselves or their loved ones, and what needs to be addressed in order to enable our seniors to be safe in their own homes. My vision remains steadfast: to educate, equip, ensure, empower, and elevate seniors and their families throughout the aging in place process, arming them with top-notch information and access to other like-minded, qualified providers. So let's talk about some statistics. Why is fall prevention so important, you may ask? Why is there a whole month dedicated to fall prevention? I'm going to share 4 reasons with you. The number 1 reason is falls are common. Falls are the leading cause of fatal and non-fatal injuries for older adults in Canada. 1 in 4 older adult falls each year. As a matter of fact, every 11 seconds, an older adult is treated in the hospital emergency room for a fall. And every 19 minutes, an older adult dies from a fall. This interview will be about 30 to 40 minutes. So in that time, 2 adults, older adults, would have died from a fall. The second reason is falls can cause serious injuries. Falls result in injuries such as hip fractures, broken bones, and head injuries. In fact, more than 2.8 million older adults are treated in emergency departments annually because of a fall. And this results in over 800,000 hospitalizations. The numbers are alarming. Third reason is falls are costly. The average hospital cost for a fall injury is over $30,000. Falls with or without injury carry a heavy burden on the quality of life. And after a fall, many older adults develop a fear of falling, and as a result, they limit their activities and social engagements, which is really a step backwards. Fear of falling can result in further physical decline, depression, social isolation, and feelings of helplessness. And the last reason is that falls impact caregivers too. Research has shown that after a care recipient's first fall, caregivers report a significant increase in caregiver burden, fear of falling, and depression. Research has also shown that the toll on the family caregiver's health appears to increase over time. If you can prevent a fall, whether it is for you as the caregiver or the person you're caring for, you can save time, stress, and money. Now, the term financial services comprises many different things. There's a plethora of opportunities or different sectors in the financial sector, from banking to investments and beyond. The options are vast and varied. Last night, we spoke with Zamal discussing the 411 on financial planning for the what ifs. Tonight, as you know, we'll be discussing the 411 on insurance for seniors. Insurance is one of the most common areas of financial services. Generally speaking, most people have some understanding of insurance. It is a system that you pay into monthly or annually, which acts as a safety net and covers costs of some large expenditures, which are often unforeseen. There are many kinds of insurance: health, auto, home, renters, and life insurance, just to name a few. The goal of our conversation tonight is to take the mystery out of insurance as it relates to elder care planning. With that being said, Andrew, the stage is yours. Tell me about yourself. Tell me about you. How did you end up being in insurance? Let's get to know you a little bit better.
All right, Des, that was a phenomenal introduction. Wow. It's so interesting because your story somewhat sounds like mine, just a different platform about your passion and how you transitioned from corporate Canada to do your own, pursue your own passion and dreams. And that's where I found myself. My background is that of an electrical engineer, but it wasn't serving others. Like I was going through a regular 9 to 5 job, what I do, and but I never felt I was being impactful. I thought I was here for the greater good. I wanted to do more for people's lives. And I will never forget back in 1999, I believe, I was attending a church in Toronto, and one of the senior mothers in the church, she passed away. And it was so interesting because everyone collected donations for the burial, and
Wow.
they passing around a offering plate. And I thought it was unusual because not too long ago, I was living in Niagara on the lake, and a friend of mine, grandmother passed away,
Mm.
and it was a totally different paradigm, right? It was totally different. There was no offering plate being passed around. There was no donation being given. As a matter of fact, um, they wanted all donation to be donated to the Parkinson's Society because that's what she died of, right? And they never worried, never lost his home. They went and they celebrated, um, and they actually sold the home that she had later on. And it was a totally different comparison. I'm like, okay, why is it that she passed away? There was no donation. Why is it that this individual passed away and there's a donation? So having a curious mind, I probed, what happened. She had insurance.
Wow.
Because she had insurance, she was able to maintain her life, to keep her home, and the family was not didn't have to sell anything to really supplement that funeral.
Mhm.
And so it put me on a path where I wanted to know, I wanted to help people, I wanted to find out, okay, what is it that I need to know? Because I've always felt if there's an observation, there's an obligation. So I
Wow, I like that.
observe. Yeah,
I'm going to pause right there. If there's an observation, there's an obligation.
correct.
Powerful quote. Powerful quote.
Absolutely. So
I
now
like
I felt a little bit obligated to
it.
either learn the knowledge so I could help a lot more people like this mother in the church who probably, I'm assuming, she did not know.
Yeah.
She did not know what was available. But how is it possible? We live in the same country, different city. Some
Yeah.
people are aware of certain things and some people are not. So I made it my personal vision to learn. And plus, I did not want my parents to be in the same predicament.
Yeah.
They own a home. My mom worked, my dad worked. If my dad passed away, I knew my mom would be struggling and vice versa. We would be struggling, right? So I made it my personal mission to pursue what the alternative is, study, so I can be a source, a conduit to help the community. So that's how we started. That's what gave birth to the desire to learn insurance and just to help people, right?
That's amazing. It's funny how you discover things. Like I fell into real estate. The primary reason was when I purchased my first home, I didn't have my license. However, through not having my license, I
Mm,
didn't really understand mortgages and how everything worked, and ended up losing a lot of money, which I could really use right now. Ending up using a lot of money when I sold my home because I didn't know about the charges for breaking your mortgage and stuff. So I
mm,
vouch that if I ever purchase another home, I need to know exactly what is happening.
indeed.
So it's a similar type of story. You see something happen and you don't want that to happen to your family.
Absolutely.
And that is something that is so common with a lot of people. You see GoFundMe pages for
Yes,
when someone passes away and whatnot. But also I think also a lot of people don't know what insurances are available to them even when they're alive.
indeed.
And people think of insurance, it's always like, okay, life insurance. So when I pass away, it can cover my expenses, or my family gets money if you have young kids. But there's also insurance that's relevant while you are still living. So
Indeed.
before I go into defining the different types of insurance, I looked up on Investopedia. I think it's
Mm,
an investor, like a dictionary for investments. And it defined insurance, just to make sure everyone's on the same page, all our guests, insurance as being a contract represented by a policy in which an individual or entity receives financial protection or reimbursement against losses from an insurance company. The company pools clients to make payments more affordable for the insured. So are we correct on that definition that they've given? Because Google's not always correct. So that's just
yeah,
one that I pulled
that's
off.
close. That's close enough.
It's
Yes,
close
yes.
enough. Okay. So what is the difference between life insurance and long-term care insurance?
Okay, life insurance is they should change the name to death insurance, right? Actually, life insurance is pretty much death insurance. Living long-term care is living benefit insurance. So those are the two categories.
Mhm.
Life insurance is paid out on the decease of an individual. Living benefit or long-term care, you can realize the benefit while you're still alive,
Okay.
right?
Okay.
And living benefit encompasses long-term care, critical illness, disability insurance, these all falls under the umbrella of living benefits because you can pay into it and you can realize the benefit now.
Right, right, right. Okay, so you actually led into my next question. What illnesses are covered by what's considered critical illnesses? Let's touch on critical illness insurance first.
A critical illness is any illnesses that um, could potentially cause you to either something that happened that causes you not to be able to carry out your normal daily functions. You know, example, a heart attack,
Mhm.
stroke, right? Loss of a limb, paralysis. These are detrimental illnesses that will um, cause you not to be able to do your daily activities,
Mhm,
right?
mhm.
And there are almost 33 critical illnesses,
Wow.
yeah, available, and each company has different um, guidelines as to what they will protect. Like some
Right.
companies will protect 2021 critical illnesses, some policy has 30, some has 10, some
Wow.
has 15.
Wow.
So that's why it's so important that if you are interested in protecting yourself for critical illness, you have get a broker, someone who has access to the different companies, and you do a need analysis, find out what your needs are, so we can find the right um, coverage and protection for you.
So would your goal not be to get the one that covers all of them, just in case something happens?
Yeah, but a lot of
Okay.
factors plays into that. Cost,
Mhm.
right?
Okay.
Yeah, cost is a big factor in why a lot of people chooses not to go the full array of 30 illnesses.
Wow. So I guess like I was reading about insurance, I was doing a little bit of background today, and they mentioned lifestyle illnesses, which are like diabetes and
Hmm.
things like that that are caused by either, I guess, environmental or the way you eat and stuff like that. Are you
Hmm.
covered for those type of things, or this is just more things that that hinder your ability to have an active lifestyle?
Yeah, there are more so things that hinder your ability to have an active lifestyle.
Right, right. Wow. Okay. And what are the types of disability insurance then? What is classified as
So,
disability then?
so disability, as you know, you have short-term and long-term disability.
Yes.
Disability would be something more temporary on a short basis,
Mhm.
where critical is something that could basically cost you your life.
Right, right,
Right, that's why critical word coming. Disability could be short-term or long-term, something you may not die from
right,
now, but
right,
it will deem you immobile for a longer period of time.
right. And what is the threshold between short term and long term?
Usually it's about 90 days. Usually the way the insurance company looks at it, if your disability will can be recovered within 90 days, it usually
Right,
consider a short-term disability. If it goes longer than that, they normally deem that long-term disability.
right. Wow.
And
Okay.
some examples of disability, like a slip and a fall, you're not able to
Okay.
walk for a week. You break your
Right,
leg, right?
right,
That would be a
right.
disability. You cut your hand. You're disabled. You're not able to do your active daily
Mhm.
task.
Right.
Um,
So those are different types. Okay. And when we're talking about seniors, like can someone who's 65 or 70 at that age get insurance at that age? Or is it something you should get when you're younger in hindsight for when you get older?
yes, the recommendation is always to get it when you're younger. Number one, the cost is a lot less.
Hmm.
Because as we know, insurance is based on risk. So the
Yes.
insurance company look at you as a higher risk the older you get,
Mhm.
for health risk. So when you're younger, you have a lot longer time frame to actually pay
Hmm.
for it. And
Hmm.
so it's a lot less expensive. When you're
Hmm.
older, costs a lot more, and they have the tendency to have a lot of exclusions, pre-existing conditions. If you've been ill for a longer time, they may not include certain coverages,
Hmm.
right? But first part of your question is 65, yes. Um, the insurance range is from 0 to about 75. We can probably get you coverage.
Right.
Type of coverage varies. and it varies, depends on the insurance company, the insurer also. But
Right.
the best time to get it is when you're young, when you're healthy, and when you're in your prime. You get it, you lock it in place, and you just keep it.
And is it something that you pay like an annual premium? It keeps renewing, and like how does the payment process
Yeah,
work for that?
depends on the insurance you get. You can pay monthly, semi-annually, yearly. As you know, there are three types of insurance. You can get term insurance that protects you for a defined term,
Okay.
10 years, 15 years, 20 years, 30 years, and 35 years.
Okay.
And there's permanent insurance. It's a permanent product. That means you can pay for limited pay, 20 pay, or you can pay until you reach age 100.
Wow.
Right? And then you have a universal life insurance policy, which is a combination of both, and investment there as well. So it depends on
Right.
the policy that you get,
Right.
um, and the duration of the policy that dictates how you pay, how much you pay, and the
Mm-hmm.
duration of pay.
Mm-hmm. Mm-hmm. So someone say 65 or 70 who say is a cancer survivor, for example, can they get insurance? They've had cancer, say when they were younger in their 40s or 50s, they've overcome, they're a
Mhm.
survivor. Can they still get insurance, or will they factor out, say you can have insurance but not for anything cancer related? Like how would that work?
Yeah, you do have companies right now. What we have non-medical, some companies that offer non-medical policies where once you qualifies or you answer no to certain questions,
Mm-hmm.
you are guaranteed that you'll have protection. Now, cancer, yes, there are companies out there that will still protect you. And that's why, again, a broker would be the ideal candidate for you to go through because we will know which company to go to, the
Right.
type of based on your illnesses or based on once we have done a needs analysis, we'll know what to apply for, so you stand a greater chance of being accepted and not
Right.
declined.
Right. And just for clarity, I know in real estate, when we talk about mortgage broker versus someone who works at the bank. So the
Mhm.
bank, for example, represents their products. A
Correct. Exactly.
broker represents banks and other products, so they have
Correct.
more options as opposed to just that one institution. It's the
Correct.
same thing with
Correct.
insurance.
Same thing with insurance. Correct.
Good. What kinds of questions will you be asked when you're obtaining this insurance? Like, I know that they do a physical, like what can you hide? Like, what type of questions are you asked?
Well, first, when I meet with a client, I do a needs analysis. Why do you need insurance? That's the first
Mhm.
question to ask. Why do you need, and why do you need the amount that you said you need? And a lot of time, what I've found is that someone who say, I need $1 million insurance, okay? After the need analysis, they need 500,000, right?
Yeah.
Because what are they trying to protect? Or someone who say, I only need 500,000. After we've done a needs analysis, they have a mortgage, they have young kids who later on have to go to university. So once we factor in all those costs or those, we realize they need 1.5 million in
Wow.
insurance. So needs analysis is very essential. It's a part of our practice, a part of our due diligence to make sure um, that individual has a holistic plan
Mhm.
and is fully covered. So that's where it starts. A needs analysis. Why do you need it? Once that determination is made, then we move forward.
Right. And I know you just mentioned having a mortgage. I'm going to kind of segue a little bit and come back to the main line of questioning, but I just thought of something. I have a good friend of mine who's purchased a home with her husband. He's now deceased. He had cancer. He passed away. They did not have insurance to cover the balance of their mortgage. So she was left with this. And I know it's a lot of people when they get mortgages, they get offered mortgage insurance through their
Mhm.
broker, but it may not be the type that covers death.
Correct.
So can you speak a little bit more on that? Just because it's something that came to me and I'm like, you know what, that's something that's important that people don't know about.
Yes, gladly. So if she had gotten it through the bank, typically the bank is this protective the sum of the mortgage. The
Yes.
mortgage $500,000. Your insurance is based on that. So what typically happens in the case of that individual passed away, the bank will pay off the mortgage, but there's
Mhm.
nothing left for that individual. So what I
Mhm.
always propose and always recommend, get your own personal insurance where your family, your beneficiary is named by you. So
Yeah.
in the event something happens, that money will go to that individual and they will pay whatever needs to be paid. The bank is not the beneficiary. The bank doesn't get your fund. Your family member gets the fund. And
Yeah.
it's not a declining insurance policy. What I
Yeah.
mean by that, yeah, with the banks, you're paying the same amount, and you take out example, you take out a $500,000 mortgage insurance. Your house is now worth 400,000, but you're still paying the same amount,
Yeah.
right? In the event something happens, the bank will pay the 400,000, so you have no mortgage. But then you still have no money for property taxes. You have no money to bury that individual. But with
Yeah.
your home policy, if it's $500,000 worth of insurance, some insured, that's what you'll get. So you can pay off your mortgage and you still have surplus to do
Yeah. Yeah.
your own
Yeah,
need.
I'm glad you mentioned that too, because that was the next thing I was going to touch on is that they only pay off the balance of your mortgage, not the
Correct.
value of the home.
Your
So
home,
that is
correct.
something also important that people need to realize. Switching back now, are there any pre-existing conditions that absolutely disqualify you from being able to get insurance?
It's a very good question. Very good question. I have not encountered any yet. um, the insurance industry is so wide where there's so many providers who are niche,
Mhm.
that will create policies and put plans in place to cater to a certain. If you're a skydiver, at one time skydivers could not get insurance. Now we can get them insurance. If you,
Really?
yeah,
Wow.
yeah,
Okay.
risk. If you're a pilot, right, at
Yeah.
one time you were not able to get insurance because you're high risk. Now you
Yeah.
can. If you're police officers, you're high risk, right? Now
Wow.
you can, right?
Okay.
So we have niche market that catered. If you have cancer, yes, we can get you insurance. Pre-existing condition, yes, we can get you. You may be underwritten or you may be rated, pay a little bit more than someone without the condition would, or that pre-existing may be excluded from your policy, but we can still get you coverage.
Right, right. What about coverage for, I know every policy is different, but what about coverage for someone say needs 24/7 home health care? They don't want to
Mhm.
go into long term. Are there policies that would cover that?
Yes, yeah, we do have long-term care, which is really growing right now, and it's very hot commodity, and it's something that I really promote and I think is very valuable,
Hmm.
especially for seniors. And so a lot of seniors do not want to leave their home. And if they do have a long-term care policy, the money is paid directly to them, and they can take that funds and do whatever they want to do, either pay for someone to come in and take care of them, do
Yeah.
renovation of their home.
Oh,
They
wow.
don't, yes, they don't need to leave their home. They can stay in their home. So long-term care policies are, and you decide how much money you want to make. So at the inception of the policy, we determine that, okay, you know what, in in the event that I am not able to function normally. I'm not able to do one of the six core um, disciplines, eat, sleep. I will need someone to come in my home. So I want to receive $1,500 a month. So we base the policy on that. And if you were to experience two of the five um, challenges, then
Mhm.
insurance is paid to you, and you can take that fund and do whatever you want to do with it. So it's really hot right now, and it's grown. It's been around for a while, and for seniors, that's my strongest recommendation. As a matter of fact, when you're younger, age in the 40s, that's the time to put that
I'm
in
thinking
place,
about that now.
right?
I'm
You don't
going,
want
you
to
know
get
what?
old.
I think I need to get that because I know I don't want to go into retirement residence. I want to stay in my own home. And I don't know if you saw
Absolutely,
last night's show, but I went through the numbers it costs to age in place properly with all the modifications and bringing in care. It's quite expensive. So
it's
definitely,
very expensive.
that is huge. And I'm pretty sure, watching COVID and what's happening, a lot of people I know are pulling their
Absolutely,
family members out of these places and they're probably wondering how can we make this work? So that is
absolutely.
definitely valid information. I'm going to just segue
Yeah,
from my own questions. I saw some questions coming in the chat. Someone said for the critical care policies, are premiums fixed year to year, or can they increase over time?
It depends on the policy that you receive. If you get a term policy, you can get term 10, term 20, term 25, then your monthly premium is fixed,
Okay.
right? So you know upfront how much money you're paying from day one
Right.
until the last payment is made.
Okay. Okay. And another person says, could someone just get funeral burial costs covering insurance separate from other insurance the person has? So I guess, can you just isolate funeral insurance separate from other insurances and have that policy for that?
Funeral insurance. I am not. In situation where I've seen they as an add-on to a policy, like they would take like a term policy for 20 years or a permanent policy, and
Mhm.
they'll have that as an add-on. But
Right.
I've never had an experience where it's a standalone. You can buy it as a standalone product.
Right.
May be available. I'm just not aware of it, but I'll be happy to look into that for that individual.
Something that you'd have to look
Yeah,
into.
yeah,
Okay, that's great. And that's actually a very good question, if that is
indeed.
available, because again, funerals are something that can be quite costly. So
Yes.
definitely good to know.
Yeah.
Um, so my next question for you is, let me see here. I have a bunch of questions listed. Are you able to shop around for insurance, or are you committed to the first person or company that you approach?
That's a very tricky question.
Yes, it is. And
uh,
I know why I asked that question,
yeah,
because when I was looking for business insurance
yeah,
for my business, she asked me, the first person I dealt with, she asked me if I'm working with anybody else. I said no, and
yeah.
I wasn't. But then I wasn't happy with the service I was receiving, and I
Mhm,
told her I don't want to work with you, and I went somewhere else. And
mhm.
because she had put in some applications, it locked the other person out of
Wow.
being able to get there. So I had to send a letter saying no, and text messages proving I didn't want to work with this person. So is that the same with insurance?
No, no, you can go anywhere you want. You could work with the advisor that you want. You're not bound to any contract with the advisors. You don't have to sign a disclosure that I promise to work with you and no one else. No, if
Yeah,
you, yeah, working with me and you don't like the level of service I offer, you're welcome to go anywhere else. And,
right. And is the person getting insurance, are they charged by you like a commission, a percentage of it, or are you paid by the insurance companies? How does that work?
yeah, paid by the insurance company.
Okay, so there's never any cost then to the, I know like even
To
with
the
mortgages,
individual.
if the person has to do, a lot of times they're covered by the mortgage, whoever's giving them the mortgage, but sometimes if they have to do extra work, I guess, behind
No,
it, you have to pay a premium.
no,
No.
no, not at all.
Okay, that's good to know as well. Um, Someone here says, Daniel Wingarden, he says funeral insurance, prepaid funerals normally sold through funeral homes.
Yes.
Insurance is, I guess this person knows about insurance. I'm not
Yeah.
sure.
Yeah, that's
Life
true.
insurance.
That's true because you could go to any funeral homes and get a funeral policy, and that will cover probably a lot, all the
Right,
arrangements, and all the addition, the flyer, the program through the funeral
right.
home. Those are available. Yeah,
Okay. So that's a different, that's through the
that's
individual
through the funeral
funeral
home. Correct,
home.
correct,
Okay,
correct,
so that's a different avenue you'd be taking then
correct,
directly. Can also be called burial insurance, not as flexible as life insurance is what he's
correct,
saying.
correct.
So that is
It's
good to know. Thank you,
yeah,
Daniel.
it's specific for that reason, for that, right?
Yeah, exactly, for that given purpose. No,
Correct.
that definitely makes sense. Does your credit rating affect your ability to get insurance?
No,
No, they don't do a
no,
credit report.
we don't do a credit report.
Okay, it's just you're able to pay it.
Yes.
Does your income affect your ability to obtain insurance?
No. What it does, when we're doing a needs analysis, it plays a role because if you are making $10,000 a year and you want a $1 million insurance policy, it does raise some red flag, right? So it doesn't really affect you, but it will create some questions as to why you're making 10,000 a year and you want $1 million coverage.
Really?
You have
What
that
if you want to make sure that your family is good when you're gone?
yeah, you'll
That's,
be able to secure, but to create some red flags as to why you are
wow.
applying for $1 million and you only your asset. is only 10,000.
Yeah.
Right.
Yeah, no, I know what red flags mean. I worked with in a previous life when I worked in IT. I worked with an insurance company. I won't name them, but I worked in the legal department, and I saw some lawsuits pass through. A lot of times, insurance, if they sniff any form of fraud, they will
Yeah.
spend more money to investigate you than pay out
Than
the
what it is.
policy
Indeed.
premium. So I definitely know that. I have a question here. Do all types of insurances significantly do all types of insurances significantly increase after the age of 75?
No, again, it depends on the kind of insurance you get. If you most, not all, most term insurances expire at
Mhm.
age 75, right? Expired done. Um, Permanent product, it continues. It pays the same amount monthly for the full duration, either to age 100 or to a predetermined age, right?
Okay,
So it won't increase, right?
great.
Now, if you're another policy, like a universal life policy, you'll have the flexibility to go up or go down.
Mhm.
But that's something that we have a conversation about. We decide on at our sit down meeting. Okay, what do you want this to do when you turn age 75? Do you want it,
Okay,
right? It's something that you plan.
right, right.
But
Okay,
traditionally, they do not. Yeah.
okay. So, okay, let me just come back over to my other questions. We have a lot of questions. This is good. People are
Oh,
interested in
fun.
this topic. What is a get out clause? I saw something about a get out clause relating to insurance. What is that?
See, insurance is a unilateral policy, meaning that if you pay, you're covered. If you don't pay, you're canceled, right? So you can get out, stop paying. If it's a new policy, it's a new contract, you have a 10-day. For example, you and I
Cooling off
sit down
period?
today. You have a sit down cool off period.
Yeah.
Um, and you have 30 days. So within that 30-day window, if you decide not to proceed, not to continue with it, you'll get your full refund back within 30 days. After that, you cancel, then you do not get your refund back. But
Mhm.
get out clause, totally up to you. You're the driver as the insured. So the moment you feel this is not serving your need anymore, cease paying and insurance cancels.
Right, right. Are there any other clauses that one should be aware of in this contract? Like, are there any clauses you should be aware of? Or in other words, are you able to take this contract to your lawyer, say, before you sign anything and say, can you look over this? And then come back and say, okay, I'll sign. Like, are there any
Absolutely.
red flags?
Yeah, that's why you have the 10-day cool off period. So you can look it
Okay,
over, bring it to
it
people.
allows me.
Yeah,
Okay,
allows you that timeline to look it through, to ensure that this is actually what you want, what you need,
right.
and it serves your need. And if it does not, we can revise it. You're not obligated, right? You can cancel it. You can say, no, this is not what I signed up for. Give me what I signed up for. And
Right.
yeah, you're under
Okay.
no legal obligation.
Okay. I have another question. If there are multiple policies on a client, does only one get paid out? For example, a senior forgets that they have had an insurance with one provider and
Mhm.
gets insurance with a second provider. Is there a pecking order, or would they get paid from all the providers?
You
Or
will get
can
paid
you have
from.
insurance with more than one provider? That's actually a good question. Another one too.
Absolutely. You can have insurance with hundreds of providers. Yeah, yeah, you're not limited. Once you have the ability to pay for it, you can have it with multiple ones and they will all pay out. So they're all individual policies.
Right, right.
Yeah.
Okay, so
Which
that's
is,
not a it's not a red flag if you have a couple different insurance
no,
policies
no,
with
no.
different people.
Now
Okay.
that's different for disability insurance. With
Ah,
disability, that's totally different. There's a picking order there, right? There's a
right,
right, but for life insurance, it does not matter.
right. Do premiums go up each year? I'm not sure if I asked you that, generally speaking, or you said there's a fixed.
Yeah, and it depends on the policy. If it's a term policy, it is fixed. If you have a universal life policy, it may or may not. It depends on the plan that we provide you with.
That you're provided with.
Correct.
Okay. And are there any like specific insurance policies for seniors in mind that covers, the main things that a senior should have? Or is it something that you have a base package and then you do the add-ons based on what you do the analysis of what they need?
Very good question, Des. Insurance is pretty standard. That's why it's so important to do a needs analysis. Like I'll sit with a senior and say, okay, what do you need this insurance to protect? Do you need it for final expense? Do you need whatever you need it for? So it's going to be catered for your needs,
Mhm.
right? So there's no standard one shoe fit all policy in insurance. If you go to an agent, you may find that because they can only market what they have. But going through
Right,
a broker, we find out what your needs are, and we tailor insurance plan to satisfy your need.
right, right. We have another question coming in. Can I buy life insurance on someone else?
Yes, once you have an insurable interest, you can buy it on your children, you can buy it on a business partner, you can buy it on your parents because you have an insurable interest. And what that means that in the event your parent or someone should cease to exist, you have the responsibility to take care of whatever you need to take care of. So you got
Mhm.
to prove that there's a financial. I could not take out an insurance on you without a financial interest. You want to know
Okay, that's what I was
why?
wondering. Okay.
Yeah, what's the relationship between both of us? Why do I need? If it's a business, we're a business partner, so there's a
Yeah.
financial interest there.
Okay. So what about spouses? Can someone take
Absolutely.
it? Can my husband take out a policy on me and I don't know about it? Is that something that's allowed?
Yeah, you could.
Okay,
You could,
that's
yeah,
good to know.
yeah.
That's good to know. But do they, so is it something, even if you have an insurable interest, does the other party, apart from minor children, obviously, have to authorize this policy, or they could just do it without the person authorizing?
Usually you have to be made aware.
You have to, okay, good.
Yeah,
That's good to know.
yeah, there's insurance
Okay,
policy out on you.
okay.
Correct.
Another question coming in, what kinds of death are not covered?
Hmm. Very good question. Again, it depends on the policy. Some policy will not pay out if you die committing a crime,
Mm,
right?
okay.
Yeah. Some policy will not pay out if, so for instance, now Canada declare act of war and it's a terrorist attack. And if
Uh,
war is declared, it will not pay out because it's an act of
wow.
war, right?
Right, right.
Yeah, some policy will not pay out if you
No body. I know that when I worked with
some
that insurance
bodies.
company, there's a particular case where the husband took out a policy for $1 million or whatever, and then he went traveling to somewhere overseas. And there was a police report, but there was never a body. And the insurance company, this was like a long going case. They would not pay it out because they're like, no, the insurance policy is new. He's disappeared. There's no body. So
Yeah, yeah,
they would not pay out on that policy. So
correct.
there are certain, what about suicide?
Suicide, they have a 2 year suicide exemption. If you commit suicide within the first 2 years, it will not be paid. But
In the
after
first two
that,
years of getting the
yes,
policy.
within 2 years, correct. But
Wow.
a year plus a day, commit suicide, it will be paid.
Wow. Okay. So that's good to know as well. One question that I had for you is, again, and I asked them all the same question from a financial advising perspective. This is from an insurance perspective. Times are rough. A
Mhm.
lot of people are living paycheck to paycheck. What advice would you give to those who do not have insurance due to financial constraints?
My advice is because time is rough, that's the reason why you need to have insurance in place, right? Because time is
Wow.
rough for everybody. You need to make the sacrifices necessary. Because if you're the breadwinner and something were to happen to you, how
Mhm.
would your family survive? That's the most important thing we got to think about. How would my family survive, right? So
Yeah.
make the sacrifice, $20 a month, $30 a month, to get something in place, right? Because that's why we
Yeah.
work for a family. Get something in place. That should be my
That is a
recommendation.
very real comment. So you're
Absolutely.
saying make it a bill. Like you have a
Make it
cell
a
phone
bill.
bill, you can have insurance. That's what
Absolutely.
you're saying basically.
If you
Make it a priority. There's no
make it a
excuse
priority.
to not have it.
If you can go to Tim Hortons or Starbucks and have a coffee, you can have insurance.
Yeah. No, that's a reality check right there for a lot of people. And what
Absolutely.
about on your, I mean, we're talking about seniors, but even it's the same for your children. Should you have insurance on your children as well?
Yeah, yeah. I believe you should have insurance in your children. I have insurance on my children because that is the insurable interest, right? So that's
Mhm.
strongly
Mhm.
recommended. But again, it's all has to do with why you need to have insurance for your kids. All has to be why. What's your intention? What's your motivation? Why you need this? Would the money
Mhm.
better serve if you put it in a saving account, in a tax-free saving account, in an investment account, in stock versus having insurance,
Right.
right? If the children, if they're young, you
Right.
could add them as a rider on your personal policy, right? Instead of them having
What's
their
a
own.
rider? Can you break down that term rider? Like tag
Yeah,
along, they're
yeah, it's
in the car
like
with you.
like an add-on, like a combo, like you get a
Okay.
on your policy.
Yeah.
Yeah, as opposed to
Okay.
them to have their
Okay.
own.
No, that's good to know. Going back to when I first introduced you, you've been doing this for since 2000, right? For 20
Correct,
years.
correct.
Would you say this is your calling, really, to be able to educate people on insurance and to provide them with that security?
Absolutely. I see what it does. 'Cause I've seen what it does on both sides. I've seen someone who passed away without and the hardship it caused on the family. And I've seen on the other side
Mhm.
someone who passed away and they had it. And although they were mourning, but at the end of it, they did not lose their house. They did not lose their car. They
Yeah.
were able to mourn and not worry where the next meal was coming from, right? And to be
Mhm.
able to, what gives me the greatest joy is going to visit someone, sitting there in your home, right? Walk away knowing that if something was to happen to the husband or the wife, they get to keep your home. They get to keep your car,
Yeah.
right? They get to live,
Yeah.
right? That
Yeah.
gives me the greatest joy knowing that I've left their family better than when I walked in.
Wow.
So I think
Wow.
that's my mission to
Okay.
just educate people, let them know that listen, if it's only $20 a month, you can afford to have something in place.
Can
Have
you work backwards can you work backwards then? And that's just a question that came to me. In obtaining insurance, can someone come to you and say, listen, Andrew, I can only afford $20 a month or $30 a month. Work backwards from that amount and let me know what I can get. Can you work that way as well from what they can
yes, yeah,
afford
yeah,
backwards to what they
absolutely,
okay.
absolutely, absolutely. But
That's
what I
important
found
to
out,
know as well.
yeah, what I found a lot of time people will claim that they can only afford $20 a month, but when you've done an analysis and realize that, oh my
Hmm.
God, that would only cover this, they realize, oh, okay, this is important to me, so I got to make sure this is protected. This is important to me, so I got to ensure that this is protected. And it's funny how they're able to find another $20,
Yeah.
right?
No, no,
Because
it's true.
yeah, it's not so much the $20, but what are you protecting,
Yeah. Yeah.
right?
Oh,
Yeah.
even me working in this industry, I'm doing home safety inspections. When I actually sat down and put together the numbers for the case scenario with Zamal last night, uh, I was like, when I saw the numbers, I know the numbers, but when I put them on paper, I was like, holy crow, that's a
Yeah.
lot of money.
Yeah.
So it's true when you think you can't afford something until you have to, or
Yeah.
it becomes a priority and you make it a priority. Like you said, average person who drinks coffee has 1, 2, 3 cups of Tim Hortons a day,
Hmm.
just using Tim Hortons for lack of a better reference. I won't even go to Starbucks. That's really expensive coffee, but
Hmm.
that's like $6 a day,
Yeah.
right? Times 7 days a week, $42. Now we're at almost $200 a month.
Absolutely.
And $200 a month, I'm sure can get you some good insurance, right?
Absolutely. Absolutely. Absolutely.
Right, right, right. Definitely. What's your favorite quote?
Desiree. I have two that's resonating with me right now is if it's to be, it's up to me, right? If a lot of the people out there needs to be protected with insurance, need to have a better life, I have obligation. It's up to me to find them. It's up to me to educate them. It's for me to do my part. And another one is the one I shared earlier. If there's an observation, there's an obligation.
That
Yeah.
sounds like something
So,
from Jesse Jackson from back in the days with the rhyming. There's an observation, there's an
yeah,
obligation.
absolutely.
That comes back to my story, how I ended up leaving real estate. I observed the numbers of people that were falling, and I observed the need for, yes, there's a million checklists online, but
Hmm.
they're obviously not using them. So there
Hmm.
needs to be a professional who can come in and do it for them. Like with so many other tasks that we consider menial, I use oil changes for example. You can change your own oil, you can go to Jiffy Lube or the dealer, but get it done.
Get
Except
it done.
the change that I'm making or what you're involved in as well is life. You're dealing with life. So
Indeed.
there's a whole other next level of obligation to be able to
Indeed.
serve people and help them in that capacity. And I really admire that.
Indeed.
That's amazing. Next question for me. I don't see any other questions coming in from our guests. What do you want your legacy to be?
I want to, when I'm done, I can say, you know what, I've done well. I've utilized the gifts and talents that the Lord has given me. I've served mankind and I've lived well. I've served. And someone look back and say, you know what, my family have, because Andrew was insistent, because Andrew saw an opportunity and he entered my life as just a broker, and he left as a friend.
Yes.
Yeah.
That's deep.
Yeah.
I always go back to one of my favorite quotes, which is, well, Oprah is who I heard said it. I don't know if she's the originator, but your legacy is created by the number of lives you touch. So every person you touch, whether it's directly through your work or even in this conversation that we're having, if it helps one person, whether they come to you or somebody else, make a move and get insurance,
Indeed.
you're touching lives. You're touching
Absolutely.
lives. And that's
Absolutely.
really what it's all about when it's all
Yeah.
said and done. It's not even about the money.
Not
It's
about
about letting people know what they need to know, because once you know, there's no excuse for not doing it.
Absolutely.
The ball's now in your court. So I totally, we come from the same place. And that's why, as you know, in the show I do the show with people who are aligned with me, who want to serve and are here for a bigger purpose than just the dollar, because that will come, but it's the serving part that's so important. Do you have any closing nuggets for us on insurance? Like things that, we've talked about so much. Let's just leave them with some key nuggets that they can take away from this conversation.
Yeah. So insurance is protecting your risk. And a lot of people, there are a lot of jargons out there about, oh, it's a rip off, it's a fraud and stuff like that. But just educate yourself on it. I believe this is the only way, not the only way, one of many ways we can leave a legacy. And we don't leave for our kids and kids. We don't leave our family in debt. We don't leave them suffering. This is one of the ways, just be responsible and take care of the people left behind. It's the best love letter or gift you can leave your children, your family members. Yeah.
That resonates. I got chills as you're saying it. That resonates deeply when you say it, because you don't want to leave them suffering. Yeah. So if you're able to safeguard that much, then do it. You have the ability to do it. Definitely. That's strong and that's powerful. Andrew, I want to thank you so much for being on the show. Don't go anywhere. Stay on. I'm going to share my screen again. I was going to say that. Don't leave. I'm going to share my screen. You'll get a chance to say goodbye again. I'm just going to share my screen and continue the conversation into what's happening next. So I cannot begin to stress how much helping yourself, a spouse, or an aging parent to avoid falls goes a long way towards preserving health and independence. I will highlight that the information shared in this show is for general information purposes only and should not be used to make any personal changes to your lifestyle or health or insurance situation or whatever without consulting with the appropriate financial, medical, or healthcare professionals. It's been a long month, and as quickly as it all started, it's almost over. It's so hard to believe it's almost over. First and foremost, I want to thank all of our panelists. I want to thank you, Andrew. I want to thank everyone who has viewed our shows for being a part of making this audacious goal that I had inside of my head become a reality. If we have touched, as I said, just one person, then we have done our jobs. And secondly, I'd like to invite anyone who's viewed this show or been on this show to join me tomorrow, December 1st at 7 p.m. to make a pledge to prevent falls. How does it work? It's quite simple. Let me first define a pledge to you. A pledge is something that you can commit to doing, changing, or improving in healthcare. Anyone can make a pledge, whether you're a healthcare provider, an administrative worker, a family member, a caregiver, an adult, or a parent. The pledge is completely up to the individual, Pick something that's meaningful to you and something that you are passionate about. So what's going to happen is tomorrow, this activity will be done in a group setting on Zoom with all people who want to participate will be on the call. And what we're going to do is we're going to have a pledge form. You're going to think of a pledge that you believe is attainable and fill in the fillable form. If you're not sure what to pledge, here are some examples. So on the community level, you can pledge to check in on your elderly neighbors who live alone. That goes a long way, especially in this time of a pandemic. Check in on them if you haven't seen them, especially with winter coming. If you go by someone's house and you know a senior lives there and their driveway hasn't been shoveled for how long, check in on them. Just a quick check-in goes a long way. The second is on an individual caregiver level. Pledge to take an exercise class this December. Pledge to take an exercise class every day for the month of December. Pledge to use a fall risk assessment this December. If you're unable to do it yourself, my company, Senior Living 411 Incorporated, does it, or let some other professional do it. The bottom line is to get it done. You can also pledge to review you or your loved one's medicine cabinets for medications that can put them at risk of falling. Take all your medications, prescriptions, over the counter and herbal to your pharmacist or healthcare provider and let them review it this December. Pledge to share these videos from this past month. They're all on Facebook. They're on Facebook and they're on YouTube. And they're also on the podcast through different platforms. Pledge to share this with anyone that you feel may need it. If you would like to join the Senior Living 411 community in making a pledge to prevent falls, email me at Desiree@seniorliving411.com by 3 p.m. tomorrow. And for those who have already committed to joining us tomorrow, get ready to share your pledges and I will see you tomorrow at 7 p.m. So as always, thank you for joining us. Remember that all discussions can also be found on YouTube on the Senior Living 411 Incorporated channel or on the Senior Living 411 podcast. Please remember to like this broadcast, share this broadcast, or subscribe to this broadcast and follow the Senior Living 411 Incorporated Facebook page and join the Senior Living 411 series private Facebook group. So Andrew, I'm putting you on the spot. Are you joining us to make a pledge tomorrow?
Yes, I'll be joining you tomorrow to make a pledge.
Awesome. Well, once again, Andrew, thank you so much. This was a great interview. And like I said, I when we spoke earlier, between the financial and this, I thought it was the best way to culminate all the discussions we had, because these are the things that often get left aside because of whatever reasons. I live check to check. I don't have enough or whatever, but they're relevant. They're so relevant as part of the fall prevention because nobody plans for these things, but life happens. Absolutely. And when life happens, it's good to have the right security blanket to just ease that much stress off of you.
And to piggyback on that, I would say it's better to have it and not need it than to need it and not have it.
Have it. Wow. You're just slaying us with these quotes today. I love it. Love it. Love it. Love it. Once again, you know what? Thank you so much. And everyone who joined us, thank you to all our participants. The room is full. We have 8 people in the room. Thank you, everyone, for joining us. Thank you for your questions. If you need to reach out to Andrew, reach out to me and I'll share his contact information with him. Or if you're in the Facebook group, it'll be posted there. He, like you hear, he wants to educate, he wants to serve, he wants people to know what their options are. And that's what it's really all about. So thank you, everyone, and have a wonderful and blessed evening.